Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Monday, the 14th of November, 2022, 6:10 p.m. Central Time. But before I get going at all, I want to remind you I've got a special currency report up on our website. It goes off tomorrow, Tuesday. I don't know what time, but it will be disappearing. So if you want to see my ideas on what the market's looking like on the weekly chart, the daily, I happen to think a top is in place in the dollar. I don't mind telling you that. How low it might go, why, the seasonals, price counts, all this coming together. It's done in a video format. You're able to look right through it. How do you view it? Well, at any point, you can just move your cursor up here and away you go with that. It's that simple. Now, for the rest of you, in addition, if you've seen that, I sent out, if you're on my mailing list, an invite for this Thursday at 12:30 p.m. Central Time, a live webinar. They're 20 minutes long in their duration. They fill up 1, 2, 3. I invite you to, with the invite, when you get it, you'll see an area there to write me. Tell me the markets you want me to cover. I'll create the charts ahead of time. We open the webinar up at 12:15. I start it promptly at 12:30. It's over at approximately 20 minutes later. So get questions, everything that you might want to ask, and away we go. So let's talk about the markets. Whipsaw day, up and down all day. If you turned your back on the market, you didn't know if it was up or down, and by the end of the day, we dropped in the last 15 minutes of trade. Does it mean anything? I don't know. Here's why. What the market's got to do is, in some manner, consolidate the stellar gains we saw last week. Lael Brainerd, the vice chair of the Federal Reserve, was on today, and she was espousing things just the way I was saying it over the weekend. We are not at a pivot unless you define a pivot of moving from 75-point hikes to 50. Most of us will say a pivot is when you stop raising interest rates. She also, Mr. Governor Waller, over the weekend, we're not at that point. So the slowdown in the amount of the hike is at hand, but not ending the rate hikes. That's going to continue until this inflation genie, the Fed can determine that it's in the bottle. One report can't do that. 2 reports, you start getting the idea of a trend. And she talked about that as well, saying, you know, the data is encouraging. That's the word that she used. And I agree with her. But 1 report doesn't do anything. Paul Krugman, Nobel laureate and so on, he said it, I think, the right way. He likes to use 3 periods to get a smoothing average, if you will, out of it. That's what I agree with, too. That makes sense. And that way you sort of get away from the idea of spike up, spike down, and you start getting a better feel. I happen to use 3-day or higher low moving averages in the trading that I teach. So I fell in love when he said that. That certainly made sense to me. The gold market tonight, as you can see, down $4. Silver market down. Copper still holding well. If you watched China put out a 16-point program for the property markets. And today it even went a little bit further beyond that. And it said that escrow deposits to a certain percentage can be used to pay contractors, get the projects going. You can't buy land with it. You can't pay the interest you own on debt with it, blah, blah. They're also making money easier via the banks to selected clients. They're not going to give money, easy money, to people that are on the verge of going under. That's basically what they're saying. So as we take a look at the gold market, number one, for the week, it's up 0.18%. So that's not bad. It's up, not down. So far, it's staying over the 18-week average of closes. So the bias in the market shifted up, which makes sense with the dollar having, it looks to me like it's peaked out. When we take a look in the next chart here, we get a daily bar chart. You can see how the markets come up. And what I said was, I still think you need to do some consolidation here. So it would not surprise me that you do a bit of whipsawing back and forth in this general zone. Trend up, bias up. The market paid literally no attention to the 100-day average of closes, but it did pay attention to the Bollinger Band in that it's trying to roll to the right-hand side. Now, if you count how many days up you had, you've got enough of a string here where the odds favor you're going to move to the right-hand side of that Bollinger Band now, not a week from now, now. What else are we embedding? Well, let's take a look. To embed, you can't count today, which is Tuesday's trade. Remember, while I'm recording on Monday, we're already in Tuesday trade. So let's go back and go into Monday. Both numbers were over 80. Go back now to, I'm sorry, I did that the wrong way. Let me come this way. Monday, both numbers over 80. Friday, both numbers over 80 in the slow stochastic. Thursday, not. Hold on here. Not there. But what about the day before that? So watch. Were you embedded? No. You need 3 days in a row minimum. Don't have it. So day 1, Friday. Day 2, Tuesday. Maybe you get your embedded readings, which would be a bullish element by the close of business on Monday. That's what you look for. The gold-silver ratio still favors silver as long as this stays under the 18-week average. That's friendly to that market. When we look at the silver, you have higher lows, higher highs. I think the market's going to fight a battle between the 200-day moving average in gray, this line, and the upper Bollinger Band, back and forth. It is an embedded reading. It's got one, which means in theory that should be support. Is that enough to play for? That's what we have to make our mind up. So I'll be studying that again in the morning. I noticed it over the weekend, and I said, I'd like to see how it plays out today. The copper market is backing off under the lower Bollinger Band, but it too is trying to embed. Remember, you cannot count tonight. So if we step back in the market, both numbers were over 80 today and Friday and the day before. You have your embedded reading. So that's what matters. So on this break, I will be looking to see where the pros buy, but I expect them to buy. They'll bail if you get a reading in the red number, which is at 83.32. If it closes underneath 79, barring that, I think they buy the market and hold it, trying to get back up into this zone here of the 200-day average in the upper Bollinger Band. In the platinum, again, you get your embedded reading. You're flirting with losing it. You haven't lost it yet. You're flirting with pulling back. If you'll notice, you made the highest high of the move today, and you're starting to pull back on that market. From Friday, you made the highest high, closed lower, had follow through to the downside. But as long as it stays embedded, the pros will play the long side. Lose it here, lose it in silver, don't get it in gold, and it tells you the markets want to come down a little bit. Is it easy to buy these type of rallies? No. After they've been that big, it's always a bit of a problem for the marketplace. In the palladium market, the battlegrounds turned out to be the 200-day average. You have an overbought market that got up there. And in the dollar index, you are still running this lower Bollinger Band. As you can see, you've sort of glued yourself to it. Could it go down in here into the 104.44 area? It is oversold, so pressing it on the Bollinger Band, I don't advise it, but I am saying I think it's going lower, so that's one of the targets that I know that I've been looking for. So again, remember, take a look at the currency, open your mailbox, see if you're on my mailing list, an invite to the Thursday webinar. Tomorrow I'll bring up the ad on that for those of you that aren't in my mailer and show you how you can get in. And come Thursday, I want to see you. I'm Ira Epstein. You have a great day. I'll talk to you all in my financial updates and, of course, tomorrow. Take care.